Hi everyone, and welcome to this week's CyMax FinTech Weekly Market Insight. As usual, it's broken down into four parts. A look back at the previous week, a look forward to the week ahead, then macro outlook, followed by some chart analysis on a variety of products. So the first thing we're looking at is our disclaimer. So trading involves potential risk of loss of capital, is not suitable for everyone, although of course hopefully it is for you. Anything to do with leverage, just be careful and be aware that you can lose substantially more than that initial investment. Everything we include in these is just purely for educational purposes. We're not trying to encourage you to trade or invest. That must be your decision. And then of course, before you make that decision, consider the risks involved, your financial situation, definitely your level of experience, and also your risk appetite. And of course, only risk capital you're prepared, but more importantly, you can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you risk your capital. So we had lots of central bank speakers last week, and they're all sort of emphasising that there's still more rate rises to come, even though inflation is dipping lower, because it is still a slow process. So in the US, we had CPI came in lower than expected at 0.2% month on month. And lower than expected 3% year on year, although core was again lower than expected but came in at 4.8%, which shows that the Fed's still got a bit of work to do. The beige book came out as well. I do like the beige book. If you get a chance, go onto the Federal Reserve website, type in the beige book, and what it does is it gives you that sort of individual, each member. They're responsible for their own states and such like, for the the local feds if you want, and they sort of give more of a broader out view of their interpretation of what's going on economically, rather than it just all being about the data. Initial jobless claims came in lower than expected, which surprised the market, 237,000. PPI came in lower as well than expected, came in at only 0.1%, with the core coming in again lower than expected at 2.4% year on year. It does show that costs are dropping and have been dropping for some time. It's just not being passed on to the consumer. And Michigan confidence data, that was a big surprise on Friday. That was much higher than expected, came in at 72.6, which, again, if things continue, it does look as though the US would get away with a soft landing. However, that is a contrast to pretty much everywhere else. So moving on to the EU, investor confidence negative 22.5, ZEW was lower than expected, negative 12.2. Industrial production was lower than expected, 0.2% month on month. Lower than expected year on year at negative 2.2%. So again, just emphasising the difference and the contrast between those two economies. And yet the dollar's still getting weaker. It just doesn't make sense. German CPI came in at 0.3% month on month, which is 6.8% year on year. And ZEW, which is sort of like a economic sentiment, if you like, was negative 14.7. Moving on to the UK, retail sales were down 4.2% year on year. I suppose, they was up 4.2% on the year, but lower than expected. So just remember, that was just slightly lower than expected, coming in at 4.2% year on year, which, considering the UK is supposed to be struggling, is still positive. Now, part of that is because average earnings were higher than expected at 7.3%. and also the change in unemployment claims was only 25.7 thousand. So unemployment crept up though from 3.8% to 4%. So, as I've been saying for weeks and weeks now, keep an eye on the unemployment numbers because I expect them to grow, and they're already starting to. Also staying with the UK, GDP was negative 0.1%, but that is only month on month. That's not quarter on quarter. So, it's obviously going to feed into the rest of the data for Q2, but that, it doesn't mean sort of the first start of a recession yet. So just got to wait for the Q2 GDP to come out. In China, CPI was lower than expected. It came in 0. And then in Japan, PPI came in lower than expected at 4.1% year on year. It was negative 0.2% month on month. Are they going to change policy at some stage? We'll have to wait and see. Also, while we're on Japan, capacity utilization come in lower than expected. That was negative 6.3%. And industrial production, not a surprise, negative 2.2% month on month, which was lower than expected. As I say, sort of industry still does seem to be struggling, whereas services are doing really well. Then in New Zealand, so RBNZ, their central bank left rates unchanged at 5.5%. Whereas Canada, Bank of Canada increased by 25 basis points to 5%. So that sort of pretty much covers last week. So we're going to move on to part 2 where we're looking at the week ahead. Before we do that, just a brief introduction to what we do in case you're new to viewing these. So apart from these YouTubes, we provide a daily newsletter. All you've got to do is just subscribe on the website, and it just includes global news, my views, and sort of, just gives you an update of what's going on. It saves you having to search for the relevant news that's come out overnight. So that goes straight to your inbox. And as a subscription service, there's also chart levels and pivot points available. We do a variety of different courses to help everybody from beginners all the way up to sort of very experienced traders. So we do one-day workshops, and there's a variety of them. You can check them out on our website. 1 week courses. One of those actually includes a free trading challenge as well, in case you want to get that funded account. And in 1 week, I can find that in a trader if you have one. And then if you're really serious about turning trading into a career, then we have our comprehensive accredited masterclass, which is designed to provide you with all the knowledge and trading tools to help you navigate any market in any conditions and also any asset class. And then we've also got the Flexi masterclass, which again includes that trading challenge at the end if you're interested in that. Other services, trader mentoring. We can just help you to boost you to get to that next level. We consult to companies, helping them with FX and commodity exposure. We also provide trader education to individuals, exchanges and brokers. And of course, as mentioned a couple of times, funded trading accounts. Our partner at Nordic Funder, one of the best, if not the best, challenge available, where you stand a really good chance of qualifying for a funded account, as long as you stay within their rules, of course. Okay, so if you want to reach out to us, it's info@cymaxfintech.com. Any questions for me, it's chris.tubby@cymax-int.com. Okay, so we're now going to move on to part 2, where we're looking to what's coming out this week.